Welcome to This Explainer. I am absolutely thrilled you're here today because, well, we're going to completely transform how you look at one of the most popular indicators in all of trading. Look, if you've ever bought a breakout, right, only to watch it instantly reverse and smash your stop loss, trust me, you are definitely not alone. But today, we're taking a journey. We're going from a basic understanding of the MACD indicator all the way to an elite, institutional-level strategy that professional traders actually use to target an 86% win rate. So let's dive right into this and turn you from a target in the markets into an absolute sniper.
Here's our roadmap for today. We'll cover the anatomy of the MACD, the zero-line filter, reading the momentum radar, spotting MACD divergence, elite win rate trend filters, and finally, the pro reversal settings.
Section 1. Anatomy of the MACD.
You know, to really master a tool, you've got to know exactly how it's built under the hood. So, created by Gerald Apple back in 1979, MACD stands for Moving Average Convergence Divergence. Simply put, it's a trend-following momentum indicator. It calculates the relationship between different moving averages of an asset's price to show you exactly where the momentum is heading. Now, novice and pro traders alike use this, but understanding its true anatomy, that is absolutely the first step to real profitability.
Let's break down the four key components. First up, you've got the MACD line, which is usually blue. We call this the fast line, and it literally represents the difference between the 12-day and 26-day exponential moving averages. Next is the signal line, usually orange or red. Think of this as the slow line. It's simply a 9-day EMA of the MAC line itself. Third, we have the histogram. These are those vertical bars you're seeing. They visually represent the actual real-time distance between the fast and slow lines. And finally, the whole shebang sits on the zero line, that center baseline that acts as the ultimate divider between bullish and bearish territory.
Section 2. The zero-line filter. Okay, this is where we need to have a serious talk about the very first major pitfall most traders face. You see, a lot of folks lose money because they just blindly buy or sell every single time those two lines cross over. But here's the truth. If you use crossovers in isolation, you're walking straight into sideways fake-out traps. When the market loses momentum and just chops sideways, those MACD lines are going to cross back and forth repeatedly. If you take every single one of those trades, you are guaranteed to hit your stop loss over and over again.
So, what's the fix? Context. We fix this by using that zero line as a filter. If you're looking for long trades, don't just take any random bullish crossover. You want to see a bullish crossover that happens explicitly below the zero line. Why? Because you're catching the momentum as it aggressively swings back up toward the center. It's like a coiled spring. Conversely, for short trades, you want a bearish crossover that occurs above the zero line, catching that upward exhaustion right as it starts falling back down. I promise you, this single filter will save you from countless bad trades.
Section 3. Reading the momentum radar.
Now that we've filtered out the noise, let's turn up the heat a bit. The histogram is literally an X-ray of market momentum. It's your radar. Here's exactly how you read it. First, bar size. The bigger the vertical bars get, the more the momentum is increasing. If they're shrinking, well, momentum is dying out. Second, color transitions. This part is vital. If you see dark green bars suddenly transitioning to a light green, it means buyers are fading out, they're losing interest. On the flip side, if dark red bars shift to light red or pink, the sellers are exhausted. It warns you exactly when the tide is turning, usually before the price even drops.
This brings us to what professional traders demand before they ever risk a dime of capital. We call it triple confirmation. You don't just want one signal, right? First, you want that crossover of the fast and slow lines. Second, you want to actually see those lines crossing the zero line to confirm a macro trend shift. And third, you want to see expanding histogram bars, proving there's actual strength and volatility behind the move. When you line up all three of those, boom. That is a truly high probability setup.
Section 4. Spotting MACD Divergence.
All right, this is a more advanced technique, but it's a game changer. It allows you to spot market reversals before they even happen. Honestly, it exposes the lie that price action sometimes tells us. Take bearish divergence. Let's say the price is hitting a new higher high. It looks incredibly strong, right? But down below, the MACD forms a lower high. That indicator is screaming at you that the upward momentum is totally exhausted and a drop is imminent. Now look at bullish divergence. The price drops to a terrifying new lower low, scaring everyone out of the market. But wait, the MACD forms a higher low. That means the selling pressure is completely gone and a massive upward reversal is brewing.
But, hey, a quick warning here. An indicator is just an alert. It's not an automatic green light to just blindly execute a trade. You must always
Always pair MACD divergence with a trendline break, a major support zone, or a strong reversal candlestick pattern for final confirmation. Remember, price action is king. The MACD is just its most trusted advisor.
Section 5. Elite Win Rate Trend Filters.
Okay, so we've got the setup, but how do we actually push that win rate up to that coveted 86%? We bring in the institutional-grade tools to safeguard our trades. 200. This is the master number, the 200-day exponential moving average. To hit elite win rates, you absolutely must never trade against the major trend. If you're taking a long MACD signal, the price has got to be above the 200 EMA, no exceptions. If it's below the 200 EMA, you are only looking for short setups. The odds will just always be against you if you try to fight the 200 EMA.
Building on that rock-solid defense, if you want intraday precision, especially if you're on, say, 5 to 15-minute charts, you want to look at entering your trades near the VWAP. That's the volume-weighted average price. Doing this prevents you from chasing a move that's already way overextended. And for defense, just tuck your stop-loss right behind that 200 EMA wall or a recent swing low. For a trade to stop you out, the price literally has to break through a major structural wall. And finally, always aim for a minimum 1 to 2 risk-to-reward ratio. You risk $1 to make 2. Simple as that.
Section 6. The Pro Reversal Settings.
All right, this right here is the secret value add that really separates the amateurs from the true market technicians. 5, 34, 5. You see, the top 1% of traders often completely abandon the default 12, 26, 9 MACD settings. By tweaking your inputs to a fast length of 5, a slow length of 34, and a signal smoothing of 5, you create this hypersensitive indicator designed specifically for catching zero-line reversals. This faster MACD perfectly times the exact end of a pullback within a major trend. So when the price pulls back, this custom MACD dips down, perfectly kisses the zero line acting as dynamic support, and bounces right as the major trend resumes. It is just incredibly precise.
So let's tie everything we've talked about in this explainer into one cohesive, totally actionable system. Step 1. Identify that master trend using your 200 EMA. Step 2. Wait patiently for that MACD crossover, preferably right near the zero line. Step 3. Check your momentum radar, the histogram, just to ensure there's real volatility and strength backing the move. And Step 4. Confirm the entry with strict price action at a key support or resistance level.
Which brings us to the end of our journey today and leaves us with the most important question. Are you ready to stop trading blind and finally let this momentum radar guide your next high probability setup? You've now got the blueprint, you've got the filters, and you even have the 1% pro settings. The chart is out there waiting for you. Take this knowledge, apply it meticulously, and just watch your trading precision absolutely skyrocket. Thanks so much for joining me on this explainer, and I will see you in the next one.